Well, I got him. Got him here.
This is maybe a year and a half in the making.
Well, I mean, hey, just you gotta be persistent, So in booking guests on this thing, I have to treat them kind of like prospects.
Yes.
Hey, it's not yet. Okay, your expiration's not up yet. I got you, but it's coming.
Yeah. That's good brokering.
Yeah,
that's good brokering. You got it. You got to the closing.
That's right. That's right. I got. I'm still. If anybody can whisper in Dan Speaka's ear, I'm still trying to get him on here, and I cold call him once a month. I'm like, Dan, I'm just trying to get you on here again.
You'll get it. There'll be that day.
I'm never doing it.
There'll be that day.
Well, man, Romy Cheema. You like Romy or Romy?
Romy.
Okay.
Yeah.
I call you Romy a lot of times.
You know what? It's all good. We have such a history. That it is all good. You were the first. We were just talking about this. But you were the first broker we did a deal with. Yeah. Way back in Brook Hollow, Round Table.
So
that was the first deal.
I remember the first time you called me. You're like, "Hey, I want to buy buildings," and you were still in your Platt Cheema office.
Mm-hmm, that's right. Yeah.
And I came over there and I was like, "Whatever, here we go again." But I don't know. But like. So this is interesting. We were actually talking about this today. Will and I recorded our weekly Shop Talk one, and we were talking about driving markets.
Yeah.
And how effective that is. Yeah. And then we talked about Will goes, some guys some of them office in their market. I go, well, that's even better. Mm-hmm. I go, that's why Romy and them were so successful. Yeah. I go, they're like, we want to buy Brook Hollow. Mm-hmm. We're going to office there. Yeah. I go, I remember, and I was giving this example, there was some capital guy wanted to buy industrial.
Capital equity.
And he officed in Old Parkland. And I went and met with him. He said, why does Cantex get so many buildings? I go, do you understand how intimidating it is to come to Old Parkland? Yeah. I go, it's not for you because you grew up in this kind of world, but us guys didn't. Mm-hmm. So I go, you're kind of missing it. Like you're in the wrong spot. Yeah. And I go, I just go eat lunch at his office every week. Just selling buildings. Like, why would I come bring you anything? So
it's funny, like that example of Empire Central. It was not the nicest building by any means. We bought it. We probably should have never bought it. But you know what it gave us is a foothold in the market and an office in the market that we wanted to buy in. And I would love that example. We're in the design district now, so I don't get to use it as much. Yeah. But I would love that example of we office where we are buying industrial buildings. Mm-hmm. Like we're there, we're on the streets. And we're not in some ivory tower in uptown somewhere. Right. I love that example. And lenders would love it. And equity partners would love it because they're like, yeah, actually, you guys are. You're not in some high rise looking at the building from your window. Right. You're actually there. You're in the streets. You can see it, feel it. I can drive to any one of our buildings in 10 minutes, max. And that worked so well because it was true. Like equity loved it, debt loved it. And it was part of our storyline. I mean, it's part of our heritage is literally a building in Brook Hollow where we got started. And that's where we obviously have grown, assets in a portfolio, but it's kind of a cool storyline. So I love that.
Well, and also that's where Mercer Company started.
Yes. So there's a couple of companies that started there. Was it Mercer? Was it Bradford? Someone told me Bradford also started.
They might have been. I don't know. They might have been.
There's one more. Yeah. It was a wild story, and you're like, does this building have
real estate energy or something?
Yes. Does it have real estate, energy mojo something? Mm-hmm. But yeah, that was our first building, and that's where we decided we never wanted to do flex office deals ever. Yeah. Which probably was also fantastic for us to see that we don't want to own that stuff ever.
Yeah, you might have accidentally gone off and bought some.
Literally, it's actually funny. I don't know if I've ever told anybody this, but our original thesis was Brook Hollow, Stebbins Corridor, and one of the things after we bought Empire, we were like, great building, we're not really competing with anybody, with this great basis, and these smaller tenants, we can push rate. Let's buy more. Yeah. And we tried to buy literally every building in that pocket we tried to buy. A whole bunch of other buildings up and down Stebbins Corridor we tried to buy. and we couldn't win. Which now I'm so glad we lost every single time, because people were like, "Who are you? Do you have capital?
Yeah.
Whatever." So we never ended up. We tried. We just couldn't win. And I'm so grateful that we never won, because those things were all not product you want to own long term. But we tried. We tried to buy a whole bunch of flex office, and until we figured out that that's not what we want to own, because we had so much trouble leasing. The tenants and the credit of tenants you're going to find in a flex office 3,000 square foot suite in Brook Hollow.
Yeah.
It's not the type of tenant base. Yeah. It's not the tenant base you want. And no brokers would work it. Nobody wants to lease that either.
No.
And so we ended up trying to lease ourselves, kind of what we're talking about. Like
Yeah.
some of the small base stuff, you're sometimes better off just leasing yourself, because it's hard to get people to pay attention from the leasing perspective.
You know, and it's like, they think, I think another thing that brokers do when they do that, they think they're paying attention, but they're dismissing like these random guys when that's really your tenant base. You know, it's like,
Absolutely.
I need rando guy. I need the auto body shop that spells cars with a Z.
Yeah.
Like,
no, you're right. And those are the groups that are going to grow, you know, from 2,000-3,000 feet to 10, 15, 20,000 feet.
right.
Right? Like that's where they got started. And so build those relationships.
I got one client, he started in a public storage, and it's Andre Simon, the Union Bower building, the 150,000 footer.
There you go.
Like, there's the example.
What a great example.
But no, having, so like we were saying, you know, I brought in a small bay leasing guy because it's just like I was kind of on the fence of buying more of it, and Will and Dylan, they really like it. They really like the space. There's opportunity for us there. And I was like, I think I go the only way I'm doing this is we bring on a guy that sits in our office and works on it and thinks about it.
And that's the way to do it. I totally agree. Like it's too hands-on, and the leases are probably too small, but the yield you can generate, like if you've got the right approach to it, like, I love it. We don't do it because it's too much work.
Yeah, no. I remember I was touring Entrada through 1499 when you were looking at potentially selling that. And lo and behold, I was like, let me tell you everything about this building, because I lived here for 5 years. Yeah. And but he was like, and I think Gwen was representing Entrada on it, and he goes, and the Entrada guy goes, so who do you get to lease this? And I go, you hire a dude. Like, I go, this guy ain't gonna do it.
Yeah.
I ain't doing it.
Yeah.
Like, it's not happening.
Yeah.
So, but well, let's talk about your story.
Yeah.
From the beginning.
Yeah.
Where were you born?
So born in Edmonton, Alberta. So I'm Canadian.
Yeah.
That's the can. That's the can in Cantex, which is funny. Some people still have not figured that out. We'll run into people that haven't figured it out. But Cantex is actually Canada, Texas.
Yep.
So it's like the beginning, like where Sam and I were, Sam business partner, brother.
Yeah.
Where we were born, and Texas is the end. Like, this is it for us. We'll be here forever. Like, we love Dallas. We love Texas. Yeah. I love that saying. I'm not from here, but I got here as quickly as I could.
Yeah.
That's how I feel about Texas. So born in Edmonton, grew up. My dad's actually has probably a better story than any story I could have. But he was born in India, and his father passed away when he was young. And he was like, I don't see opportunity here. Where I see opportunity, where I want to go is I want to go to America. And it was like, how do I get there? He didn't have any money. And so when he was 19, he was like, I want to figure out a way to get to America. And so he traveled through, this is wild, but he traveled through the Middle East. He's been to like Kabul, he's been to Tehran, he's been to Iran. This is all in the 70s before all the world changed there. Yeah. But he took a bus and traveled through the Middle East, like got to Europe. He's been to all these countries, random countries in Europe. His wildest stories, like he'd sleep on the train at night because he couldn't afford a hotel room. He had all his money in his shoe. Like he cut a fake thing into his shoe in the rubber of his shoe so money wouldn't get stolen. Yeah. And he lived in Norway for 6 months working on a farm, trying to save up some money. But he's got the wildest story. And eventually, through all of that journey, he got to America. When I think he was 20 which is wild because as a 20-year-old to take that journey around the world alone, I'm pretty confident I couldn't do that.
That's crazy to think of too, because my son's 17, he'll be 18 in June. That's only pretty much 2 years removed from that. Like I couldn't imagine him at that age. Like I can't. It's so coddled now, right?
Absolutely. No, absolutely. Like no cell phone, no like pay phones, I guess.
No
like,
email.
No email. Like no Google Maps. You couldn't call an Uber.
No.
And you need to change your currency because you can't use your credit card. He didn't have a credit card.
Yeah.
And like had to figure out how to navigate literally different countries, different languages, and
Yeah.
Like, I don't know if we could do that today, like going through all those countries without the things that we have.
Oh, we just give up.
About it? Yeah,
like, I'm going to settle here.
I'm just going to go home. We'll call it a day. But it's like that, like knowing that story as a kid, like super, for me, that was very formative because I got to see that. And then anything you do, any struggle you have seems like it's not a big deal. Yeah. Like you can't really complain about a whole lot when you know that dad did that and whatever I do is easy comparably. But growing up, my dad he was like working in a machine shop. He eventually got out of the machine shop and drove a taxi for a while. Like growing up, there was 3 of us, brother and sister, but it was, so 5 in the family. We rented a basement. I don't know if I've probably never told you this. No. We rented a basement growing up, like didn't own anything. My dad rented the taxi from somebody else and basically worked midnight shift. Wow. And eventually got out of the basement we were renting and then bought a small, place. And my dad was like, I want more. I don't want to drive a taxi forever. Like he was well educated and he's like, I want to do more. So he he studied for his real estate license. Yeah. And got his agent's license, started doing residential. And
was this in Canada?
It's in Canada.
Okay.
It's all in Canada. Right. This is all outside Vancouver. We moved to a suburb of Vancouver. I say Vancouver. My wife gets mad because Vancouver is a very nice, beautiful, like expensive city. We were in a very low income suburb of Vancouver. So that's the more real part of that. But he eventually moved from being a real estate agent. He got his broker's license and started his own company and was doing well in the space. He started doing hotels. Okay. And one of his clients said, hey, I want to buy a hotel. I want to buy it in America. And my dad was like, okay, let me help you find one. So Sam and I were on the computer. This is like late 90s. So we were on the computer, go on the internet. Like LoopNet, I think, had just been founded. So we literally would go on LoopNet, actually, and find hotels because we're trying to help my dad for his client find a hotel. And we started looking at some of the yields and some of the returns and some of the prices. And we were like, compared to what we were seeing in Vancouver and the suburbs of Vancouver, everything was cheap. Yeah. So cheap. It was really cheap per key, like per door prices. And then the yields were amazing. And we're buying 4 or 5 caps in Vancouver at the time versus 10, 11, 12 caps in America. I mean, these weren't like primary locations, but we ended up buying a hotel in Midland, Texas. My brother Sam said, hey, look, I'm graduating high school. Like, I want to move to America. If you buy this hotel, I'll go run it. And I'll be eyes and ears. I'll take care of it. And my dad was a little hesitant at first. And he said, you're 18-year-old moving to another country and then going to run a multi-million-dollar business. And so Sam went. He was there for a year. I'm a year younger. And I was graduating high school, and I was like, I want to go to America too. Yeah. Like, this is not where I want to be. I want to be in America. Like, I see the opportunity. Yeah. And so I moved to Midland. And so I lived in Midland for a year. Okay. We'd go to Lubbock when we wanted to go for a weekend to go like shopping or like have a good time. Lubbock was it's
a hub city.
Yes. Exactly right. We take that drive, that like 2-lane road.
Yeah, you can haul ass too.
Oh yeah,
it's like I mean, people literally commute from Lubbock to Midland daily. Yeah, and it's like an hour and a half, hour and 45-minute drive, but it's not that bad of a drive compared to like it's. I'd rather do that drive than driving an hour in Dallas traffic.
Absolutely, you can see how fast your car can go.
Yeah.
So we lived in Midland for a year, and I was like, Midland was tough place to live coming from Vancouver.
Yeah.
And I was like, I want to get a better education than I could find there. And so ended up moving to Austin, going to UT.
Yeah.
Graduated UT, went to law school in
What did you
Dallas.
get your degree in?
Economics.
Okay.
Yeah. And graduated. I knew I was going to go to law school.
Why did you know you were going to go to law school?
Yeah. It was, I knew I wanted
In-house
something-
counsel?
No. It was like after seeing, being on the business side, like on the hotels, the transactions, the party that showed up almost everywhere was the lawyer.
Yeah.
Right? Like all the contracts, all the agreements. It was like negotiating.
Yeah.
Like the lawyer, their thought process on negotiating, it was like, I want to be able to do that.
Yeah.
Versus, I thought, okay, I could go get an MBA. I had learned so much on the business side from being in the business side. And I was like, I'm not going to get as much from that. But if I can figure out the law stuff,
Yeah.
I can figure out how to negotiate a contract, how to read those big contracts that were coming in that I didn't understand, then I can utilize that in business and it'll help me go further. At least that was the thought process. So I went to law school and my goal was to practice for 2 years, 3 years. And then I was like, I want to figure out a way to get back to the business side. And so I ended up practicing, came out in the GFC. So 2009, maybe the worst time to be in any transactional business. And so I graduated. They actually laid off basically everybody at the law firm I was going to. Basically, almost everybody got laid off because there was no business. And I was very fortunate that they kept my position open for like 6 months. I had to wait. And they said, we're going to keep one position open. And very fortunately, I got to start. And I started in real estate, which was rare. And the reason they had the spot open is all of their clients were banks or private equity funds, and all of the work they were doing was distressed.
Yeah, all workouts.
Yes.
Yeah.
And so it wasn't necessarily what I'd envisioned, but actually probably the best. Because if you understand how to deal with things when times go bad, if you know how to handle those situations, it is really helpful when things are good to understand what can happen when things go bad.
Yeah, you see the enforcement of the contract, like what it really looks like.
Yeah. And some of my clients, their goal was to get to the real estate effectively. And so if your client says, all right, let's go through this and find the defaults and find the places that would enable us to have leverage and maybe take the real estate back. Yeah. Once you dig deep into that stuff, look at loan agreements totally differently. Like lenders have a lot of leverage.
Yeah.
And so that's what I did. Ended up doing it for 4 or 5 years, way longer than I expected, but actually amazing background to what I do today. I wouldn't trade that. I wouldn't trade that time period.
Similar to me starting in property management, I knew how to enforce the lease. I knew where the landlord was going to get you in the lease. So when I went to go tenant rep, I was like, okay, this is what can really happen because I've done this to people.
Right. Versus somebody else who might not understand any of that.
Right.
And then the value you had to your client, they were like, whoa, thank you. Like, I didn't even think of that.
Yeah.
I'm going to come back to you with some more business.
Yeah, absolutely.
Yeah.
So, okay, what law firm did you start at?
So I started it was Hunton Williams, and now it's Hunton Andrews Kurth, something like that. Yeah,
some long
two big law firms combined. Yeah.
Okay, so you're there 5 years.
5 years,
and then is that when you started Platt Cheema Richmond?
So I took a year and worked at a real estate company. I went in house.
Okay.
Which was also awesome experience because I got to see the business side mixed with the legal. So I did that for a year. Honestly, about 6 months in, I was like, I'm ready to do my own thing. But I didn't have a whole lot saved up at the time. And so I thought, why don't I just keep practicing, create a little revenue while I'm trying to figure out this real estate thing? Yeah. So I was there for a year, in-house counsel, and then started Platt Cheema Richmond, Bill Richmond, Judge Platt. So 3 of us started the firm. All 3 of us had the goal of doing other things. Yeah. So he said, hey, why don't we share some expenses? Our first office was actually on Lemon Avenue. There's a La Madeleine. Yep. And our office was above the La Madeleine. And it was some old space that somebody had left behind some furniture. And that was our first law firm office. And the 3 of us were literally in one room, practicing, sharing the cost. and I was preparing to do the real estate side at the same time. But that was being above a restaurant in an office space is not really the best place to be. It was not the best. You could smell all the food that was being cooked.
Yeah.
But we did that for a little bit, and then eventually moved into Riverfront and took the office there.
Yeah. So you're there, but so you're always. So when did in your mind say, "Hey, I really want to go become a sponsor"? Like, was that in your mind when you started Platt Cheema? I guess essentially you kind of said you all had ideas to go do other things.
Yes.
So, yeah.
So I had, when I was in-house, I called Sam and said, he was doing hotel stuff at the time. He had a hotel. He was doing value add. He'd take hotels that were basically losing their franchise, like had huge CapEx, and he'd go buy them, like turn them around, like really heavy operating. You're basically turning on an operating business with the real estate component. That's really hard.
It's a lot.
A lot. And he was doing that. And so he was doing tons of construction, tons on the operational side. And, my background was less construction, less operations, but I had seen a lot of deal structuring and like understanding the economic side. And I said, why don't we pair up my strengths with your strengths, because our weaknesses are balanced by each other's strengths.
Yeah.
And so we started, I guess technically in 2018, we started Cantex, and we initially were going to do hotels. That was actually our initial strategy was let's buy. So we bought Empire. I said, let's do some flex office. Horrible idea in hindsight. And then let's build hotels. So we actually had a hotel, Bird and Harry Hines.
Yep, I remember that.
Yeah. There's a McDonald's there now, and there's actually a hotel being built. And then we had one in Fort Worth. Yep. We were going to build the Nobleman Hotel in Fort Worth.
I remember that because I was going to invest in it.
Yeah. And we did not end up building it.
It was the fire station, wasn't it?
Fire station.
That's
exactly right. It is built. I'm actually dying to go to Fort Worth and see it, but somebody built it.
Yeah.
Sam and I had actually gone through, we got all the plans, we came up with the name. We had Hilton Boutique franchise, so we were so ready to do this. And then COVID happened. And then we were like, we don't want to be in hotels.
Yeah.
Like, we don't know what's next in this industry. So we actually ended up selling that site and then Mockingbird. And we were happy with the outcomes on both.
Yeah.
And actually more happy that we didn't have to go through with all the time and energy we would have spent on the hotel side. And probably that's what opened the door for us to get into industrial.
Yeah. So, well, I mean, you started buying industrial though in that time frame, but that was probably the real kick to be like, don't touch anything else. Just go all in on this.
Absolutely.
And you did.
It's like even now I think about, I had somebody today who was like, okay, you guys look at retail, are you guys looking at multifamily? And the one thing that we've done is stay super focused, and I think that kind of came from that time period. I would rather do one thing again and again and again, and just try to be the best in the world at that one thing, than try to do multiple things and then try to be the best at multiple things, because you maybe by its own definition you really can't. Yeah. I guess unless you have a superpower, you can be the best in the world at multiple things, but probably you can't, because you're competing against someone out there in the world that probably is doing one thing over and over and over again. Right. Right. And that's kind of been our thought process, is like, do one thing and do it over and over and over again and just try to be the absolute best at it. Yeah. And that I think comes from that time period where we were doing multiple things. We had Flex, we had that one Flex deal. We had $14.99 Regal, which man, that thing was a wild deal. We were trying to build hotels, and then we started buying industrial. It was like, well, what are you really good at? Yeah. At the time, we were kind of doing a little bit of everything. We really couldn't be really great at anything. Mm-hmm. We were kind of just good, hopefully good at a lot of different things. And it was like, let's just try to be the best at one thing. And industrial, honestly, of all of those things, is the easiest. It was like, we have one tenant, triple net lease. They're there for 5-7 years. And honestly, they don't call you. They deal with everything themselves. It's like, this is great. Once it's leased, it's de-risked, and we can go buy another one, and we don't need tons of people to operate the business. So that was some of the thought process.
Yeah. Okay. Yeah. The other, everybody sees you buying buildings, they think that's a whole thing, but there's a whole nother side to it of like capital raising. I remember you were just like always at a lunch, at a breakfast. So like talk about kind of your journey in capital raising, because that's a whole nother aspect to this business that I don't think people really understand. That is the salesmanship side of a lot of this.
Absolutely. So. Our first deals, like our dad was the first investor, probably the hardest investor.
Sure.
Not today, but probably globally we've ever had. He didn't believe in fees. He didn't believe in carried interest. He was like, if I'm investing my money, I should get the amount of return that is equivalent with what I invest.
Yeah.
And early on, we needed him to invest,
Yeah.
so we were good with that.
Sure.
And so he was our first kind of, I'll call it seed investor, but he didn't have that much capital. So it ran out pretty quickly. We were friends and family raising for a while.
Yeah.
We didn't end up with any real true vehicle for many years to come. So early on, it was every deal was friends and family, was people that, we were pitching the deals we were working on, and a lot of times people were trusting us. They weren't really. It was impossible for them to understand exactly what we were doing.
Right.
We could put together a big pitch deck or whatever, explain all the risks, but they're like, "Well, look, I trust you, and I trust you're gonna be a good steward of my money, and you're investing your money, right? Like, yes. Then, like, okay, I'll invest."
Yeah.
And so a lot of our early investors were that. And in that scenario, especially when your family's investing, your dad's investing, you really can't lose.
Yeah.
Like failure is not an option.
Yeah.
And that honestly, even to today, is in our DNA. It is actually more important to me today that we don't lose money than it is we make money. Because I always think of, do I get to go back and tell my dad that I lost his money?
Yeah.
And realistically, that's how I think about all of our investors. Is capital preservation number one. Never want to lose anyone's money. And then after that, making sure you've thought of all the risks, like, am I being conservative? Am I going to protect capital? Then it's like, okay, let's think about upside, right? From there. But if you start at a base of, I'm not going to lose your money, or I've really thought about that, then life becomes a lot easier, because then you're not thinking about your losers, right? Because those suck up more time and energy than anything else.
Totally.
Right? And it allows you to like breathe. And that's always been core to our mindset. It's never been chasing how much return we can generate. It's like, get the base, don't mess it up, don't lose dad's money, don't lose your investors' money.
Yeah.
And then from there, then let's look at, seeing how good we can do and performing as well as we can. But that part, I think, has resonated with our capital. Today, our core, our early, friends and family, we ended up having a few family offices that invested early on that we didn't realize how big they were.
Yeah.
And they invested small amounts early on, and then we performed really well. Market was great when you bought in, 19, 20, and 21, and on, hopefully other good deals. But we delivered some great outcomes, and those investors we thought were small ended up being much bigger.
Yeah.
And so some of those family offices have kind of grown with us through the last 5-6 years, 7 years, and that's the core of our capital base. But nothing. Yeah, I don't think people realize how hard it is to raise capital. There's a feeling of, I'll find a deal, and people are. They're thoughtful about where they invest their hard-earned money.
Yeah.
Especially today. There's so many avenues to find, and there's so many Instagram ads for like, hey, invest here, or the YouTube videos or whatever. Like, you see all of it. It's like, well, are these people going to be, they're great at marketing. Like, are they actually going to be executing on, delivering the investment returns they're telling you they can deliver?
Right.
But yeah, that's a little bit of our capital raising.
Well, it's also too like before the challenge in raising capital before you have any kind of vehicle is you are dealing with friends and family. You're just dealing with individuals.
Yeah.
So like you never know who's going to show up on the next one.
Absolutely.
As soon as you hit go, you're kind of like, do I got this? And so that's, for me, that was a big relief when we got our first JV. Was just like, okay, I got this. I got it.
Yep.
I can raise some more, but like if y'all don't come, it's okay, you know. And so that was a big relief at that point. But man, in the beginning, it's always like, I think I got all this, but like, you know, I should. You know?
I need to.
Yeah.
Right. Like, I think when you have to do something, right? Like hard on a deal, you might still be raising some, and like you got to finish that last part of the capital raise, then you figure it out. Yeah. Because you have to figure it out, or you don't.
No, it's like I was telling you about the situation that happened to us yesterday, and we kicked and screamed for about 5 minutes, and I was like, all right, we'll figure this out.
You will figure it out.
We'll figure it out. And so, lo and behold, like I said, we got someone coming down, so you always figure these things out. But you gotta have the grit to go figure them out. You can't just like, I give up. Like
absolutely.
Because it'll happen. You just gotta fight through a lot of bullshit.
Like the resilience, because it's easy then to give up. You could go, oh, lost. Somebody had committed some funds to this deal, and they call you last minute and say, "I'm out." It's like that can be pretty deflating.
Oh
like, so many of those. Going back, and you're like, I got to figure this out, and you know what? I'm gonna figure it out, and you do. Like, but a lot of people in that same place, you're right, just give up.
They do.
Right? Like the resilience to go, I'm going to figure this out and keep going. That's tough.
Oh, why Brook Hollow?
Yeah. I have an old deck I need to show you.
Okay.
That I did in 2019 maybe. So I looked at Brook Hollow. If you just look at a map, you've got Design District, and you've got like Town Hearth was there. You had all these cool restaurants, and you had like these high-end showrooms, and everything was expensive. And then you got Uptown, and then you've got the medical district, and all the hospitals basically dominate medical district. Land prices are wild, and you've got an airport. You've got Love Field Airport, and then you've got the Trinity, and you've got a certain number of industrial buildings there, and that's basically it. And so I looked at, okay, you've got this great location and just really good real estate, like well-located real estate, and effectively no developable land for anybody to put any competing product. And I know people have put a few new projects have come up in the submarket, but very small comparable to the existing product. And it was like, if I want to own real estate long-term, where do I want to own real estate long-term? So I looked at Brook Hollow, and we're like, this is where I want to own real estate long-term. And it's really cheap. It was very cheap. It's continued to change. But it's very cheap. And there's such fragmented ownership. And when you look at what's happening in Design District, and you look at the rental rates, and actually Design District, I'd love to get your thoughts, but Design District is not very functional. Like parking, loading, like the buildings don't really make sense as industrial.
It's not. What the interesting thing about Design District is a lot of investment money goes in there. It's not a tenant market. Like we bought a building in Design District a year ago, and like I think of investing in the Design District like I'll never see cash flow off that thing, and in 10 years it'll like 10x.
Yeah.
So that's the Design District investment. Like, but what happened, what I noticed with Design District was when I first started the business, I had Design District as a territory attached to Brook Hollow, and I just remember going down there one morning like at 8:30 to start making cold calls, and no one was at work.
Yeah,
and I was like, this is like a bunch of bullshit. Yeah. So I immediately went back to Jeff's office. Like, can I go to South Dallas? Like, I got it. Like, if I can't start making calls until noon, like, this is not going to be a fit for me. But, I remember, I think it was in 21 or something. I was just looking at, I think it might have been when we had Jim's building. And I was just kind of studying, rental down there because, we were trying to lease some of the spots in there and stuff. And I think it was sitting at like 19% vacant.
Yeah.
Like in one of the hottest industrial markets ever. But I mean,
Yes.
there's no parking, there's no
Yeah.
functionality. So
Yeah.
it's like, it's a very weird area.
It's odd.
Yeah.
It's odd.
It's very odd. I mean, you know what it is? It's a great place to put your office. It's a great place to retrofit a building and put your office.
That's right. It's a great place to go to dinner.
Awesome.
I mean, some of the best restaurants, all the hottest new,
They all go
whatever,
there.
all go to Design District, and then you've got obviously some high rises built, some Class A office, some hotels, apartments, all of that stuff. And so when you look at that and you look at Brook Hollow, you're like, well, these tenants that actually need functional buildings that are priced out of Design District, Brook Hollow is right there,
Right.
And it's in the middle of the city, and you know what? The building works. You got better parking. And it's so much cheaper.
Yeah.
And so that was part of the thesis was let's buy these as many buildings as we can.
Yeah.
And, we believe in long term what will happen in the submarket. It was also one where anytime I talked about Brook Hollow to a lot of brokers, they would say, man, everybody's lost money in Brook Hollow. That Stemmons corridor is not a good place to invest. I remember a couple of older brokers in town when we were in 2018, 2019, when we were getting started. You shouldn't invest there. And I think that was actually a good thing that a lot of market felt that way.
Yeah.
Because it opened the door to us. Because when we started, people were like, who the heck are you?
Yeah.
And do you have any money? And like, I don't know you. And why would I show you a deal? But they'll show you a deal if there's no one else competing.
Yeah.
And so at least in Brook Hollow, we had that. And we felt the opportunity long term. We're like, look, over long term, this has to improve. And that was a good starting point for investing in Brook Hollow. I don't know if I've told you this. So from the kind of cool loop of that story is, obviously we started 2018. I think our first building there was 2019, probably Roundtable. 2 years ago, we became the largest owner in Brook Hollow.
Oh, there you go.
We overtook Prologis, who was the largest owner. I think now I think you can take number 2 and number 3 combined, and that's our Brook Hollow. So kind of a cool, in a very short time period, we went from nothing there to the largest owner.
I love how you got the billboard.
Yes. Don't you love that?
Welcome to the gates of Brook Hollow as you come across the river. And
I get calls all the time with, I saw your sign and it says "Welcome to Brook Hollow."
Yeah.
But yeah, we love having that Brook Hollow. We'll keep that billboard there hopefully forever.
Yeah, that's awesome.
Yeah.
No, so you started in Brook Hollow, right? You totally dominated that. You've started to go out. Is it just Dallas-Fort Worth right now? I mean, I know you've tiptoed maybe down south to San Antonio a little bit, but have you done anything down there yet, or Austin, or
San Antonio? We've tried to buy in San Antonio for 3 years.
Yeah,
and San Antonio has all the metrics we like. It's got great population growth. It's got jobs. Logistically, like, it makes sense. It's on 35. Yeah. It very much vibes with manufacturing, reshoring. It's in Texas.
Yeah.
Texas Triangle. Like, it's got everything that should make for great, and the basis is great. You can find great basis deals there. And it hasn't really popped.
Yeah.
The way that Dallas has, honestly, even Houston now have popped.
Yeah.
And San Antonio, for some reason, we've been watching the last couple of years, it just hasn't done the same thing.
Just kind of moves along.
And I can't tell you why, because for every reason that it should be great, it just doesn't do the things that you think it should.
Yeah, it's not as dynamic as Dallas, for sure. You're not going to, how fortunate are we to be in this market? It's literally the best ever. We ended up in San Antonio I bought a building in San Antonio based off a guy out of Valwood. That's probably how we ended up in San Antonio. Mm-hmm. And Keenan had a guy called on in Valwood and, had a little iOS building in Valwood. He goes, no, I got one in San Antonio I'll sell, though. And it was a nice little building, so I bought it. And then ended up going there. You know, it was a reason to go there.
Yeah.
And then we bought that big old hunk of shit on Zarzamora and cleaned that thing up. And that thing's a rocket now. And it's I was like, this is great. This is like a reason for us to come here now. So, you know, it kind of anchored us in there.
Yeah.
But yeah, I know you're not going to get like these dramatic swings that you can in Dallas. Yeah. And everyone has to be in Dallas.
Absolutely. Like you look at those rankings, and it's like Dallas for the last 3-4 years of like all of the major rankings of like where capital wants to be, the CBRE report, the JLL. Dallas is number 1 every year for the last couple of years at least. And we see it and feel it. You know, we look at the coasts, the leasing on the coast activity. Texas even last year, Texas was leading in leasing, transaction volume, whatever. It's like, we're the best place in the country.
Yeah.
This is where I want to be. This is actually where everybody else wants to be.
Yeah.
And we have home court advantage here.
Yeah.
And that's probably rather lean in here versus trying to go somewhere else.
Sure.
But like, yeah, San Antonio is just, it's been an interesting one. Like I would, if we were talking 2 years ago, I would have said, we'll be at 1 million feet, 1.5 million feet in San Antonio by now.
Yeah.
We are 0 in San Antonio.
Yeah. Oh, it's, I don't know. I just had to go somewhere you weren't buying buildings.
we have this like we want to buy as much as we can here.
Yeah.
We talked about earlier, like we love deals.
Yeah.
We just have we all get the we have a love and passion for doing real estate deals.
Yeah.
So yeah, we just want to buy everything we see that's good. We want to buy it.
Yeah. That's what I mean. It's like we were talking, and I was like, I told Will, I think I woke up at like 4 a.m. and I was just like wired, and I was like, I think I'm addicted to cortisol.
Yeah. I mean, I'm fairly confident I'm there.
Yeah,
I'm fairly confident.
So, okay. So, how about your first portfolio sale? Like that was a good win.
Yeah,
we had that was fun.
Very happy.
It was a good outcome for all of us. So
that just traded again.
I saw that.
Yeah.
Who bought it?
Bendetti. Oh, sorry.
They sold it.
Bleecker
bought it.
Yeah.
Okay. Wow, that's so crazy. The God, we had some cool buildings in there.
Yes.
That was some fun stuff.
Round Table was number 1.
Round Table was in there.
Yeah.
We had Directors Row in there.
Yes.
We had
Beach.
What a great
deal.
What a rip, man.
You loved Beach.
Oh yeah, I ripped it on that thing.
Yes.
So Beach was, that was just such a cool story. Was Todd had always kind of brought me that building when I had I have this one family I work with, and they 1031 every now and then. He brought it to me then. I was like, man, this is a good deal. Like this is a great building.
Yeah.
But like everybody's always nervous about the printing tenant in there and all that stuff. And anyways, then that was like right in we closed that in the middle of COVID.
Oh yeah.
And we retraded that bitch too. We had the perfect time to retrade that thing too. It was like, bro, the world's ending.
And it really was.
It was.
It was ending.
But we went out there, we got that thing, and then man, I had that tenant rep deal. And I was like, we slammed them in the back on a 10-year lease. And some of the things is funny, like iOS, I think you're the first broker that was like, hey, Romy, what I love is metal buildings with a whole lot of yard. Everybody loves them, and they're always leased. Yeah.
By everybody, I mean the tenants love them.
They're so hard to find.
But nobody really wanted to buy them. They're like, oh, this junky metal building. I don't want to buy metal. I want to buy tilt wall, whatever.
Yeah.
And you're like, we should buy more of these. And I was like, no way. I don't want to buy these crappy metal buildings.
Well, you know what it was? You were probably thinking like, how am I getting out of these?
Exactly.
I ain't never getting out of these because institutional capital won't touch these, and I'm trying to aggregate.
That's right. And actually,
little did we know.
The world has changed. But actually, it's funny. Like manufacturing.
Yeah.
Same thing. And maybe because that's the manufacturing background you had.
Yeah.
Same thing. You're like, hey, these manufacturing buildings that have like heavy power and like all these features, like maybe some yard, maybe it's HVAC. It's always leased.
Yeah.
And generally people were like, oh, manufacturing building. Like, no, I want a distribution building. It's got to be 36 clear and it's got to have a perfect rectangle and truck court and all that. And you were like, hey, let's look at these manufacturing buildings. It might be metal again. tenants love them, and there's not enough of them. And so I would say you were probably early actually to our two of our favorite investments right now, iOS and manufacturing. You're probably actually you should definitely get credit somewhere for both of those. Because
I get a little asterisk or something.
Yeah, 100%. Sponsored by Jeremy Mercer.
Well, I called it like maintenance. I was like, I'm the maintenance facility guy.
Yeah.
Because I kept getting, I never did terminals. I didn't really ever get in with big trucking companies, but I'd just be going up and down Irving Boulevard, and I would get these. Well, it started with Cool Deep, honestly.
Yes. Yeah.
Cool Deep was in Prologis' building.
Was
he was in 151 Regal.
Yeah.
Running a fucking trucking company. Like,
I don't know if
full
they love
on.
that.
No, they hated him. They hated him. And like, I'm talking about full on, like, mechanic in the truck court.
Really?
Like,
No
just,
way.
I was like,
That's me. I didn't know that.
and he was like, he's like, dude, you got to get me out of here. And, he was, at the time, he was, it's very interesting. His story's similar to your dad's.
Yeah.
Yeah. Father passed away at a young age, came to America at
Yes.
19, 20. He was a taxi driver.
Yeah.
And so it's crazy. He was working with everybody, and I was like, man, I'm going to make this deal.
Yeah.
I've got to make this deal. It was like my first real deal.
Yeah.
And this was when Yellow had gone bankrupt one of their many times. And there was, dude, think about this. There was 50 acres on Irving Boulevard.
Really?
You could have bought 50 contiguous acres on Irving Boulevard. It was available when I first.
It was single digits to the dirt?
Yeah. It was like they couldn't give them away.
Really?
No one wanted that
Wow.
shit. And so I was working with a company down the RMD Quick Form.
Yeah.
I was working with them trying to find a spot, and those guys wouldn't be exclusive with anybody either.
Yeah.
And I knew they were running around with Bates and Myers, and I had shown them a building we had, and didn't get it done with them. And then I thought we got into proposals, and I thought we were going to get it done. And I go over there, and he goes, "Well, man, we found another building." And I was like, "Shit." And so there's a guy that he's like RMD Quick Form's like landlord. He's a big construction guy and a big customer of theirs, and he just owns all their buildings. Yeah. And he had bought one of the 15 acre site, one of the yellow sites. So I was like, he goes, well, yep. The guy that ran RMD Quick Form was like, yep, we're moving down there. Our buddy bought it, and we're going to lease from him. And so, because the city was kicking them out of their building.
Got it.
It's more down towards Design District. And so I was like, I need to meet this. I go, what do y'all do? Y'all don't need 15 acres. He goes, no, he's going to lease the other side out. I go, I got to meet this guy.
Yeah.
And he goes, well, he'll be here like next week. I go, you tell me what time, I will be there.
Love it.
And I get there and I meet this guy. His name's Gary, and he owns this company out of Houston called Rago, RAGO. And like this guy doesn't even have a website, but he builds skyscrapers. It's like hilarious. Like this guy's like the guy, like the mythical creature, probably has, probably worth $250 million or something.
And he showed up.
He showed up, and I said, hey, man. And I got Cool Deep over there. And I was like, and I'd called him ahead of time. I said, hey, I want to meet you. Would you look at parceling off this side, this 7.7 acres, which was the maintenance facility, because the RMD took the terminal because they wanted the docks.
Interesting. Okay.
And I said, hey, will you meet me over there? I go, I have a client. I go, listen, he's been in a bankruptcy because Cool Deep started a truck stop, and he BK'd it on an SBA loan, so he wasn't bankable, but he had cash.
Yeah.
I was like, look, he can put a good down payment down. I go, if you were going to lease it anyways, this is like doing a lease and getting 2 years of upfront payments. I go,
good pitch. I love it.
And I said, so meet me over there. So me and Cool Deep meet him over there, and dude, we just made a deal right there.
Love it.
Bought that 7.7 acres, 12,000 feet on the corner of Regal and Irving Boulevard for like $1.2 million bucks.
He'll be very happy whenever he exits it. Yeah.
And
it
was that was it. The owner financed it to him and got him in there, and he's like, all right, you're my bro forever. So
have you been to his house?
Yes.
Yeah, he invited me. I gotta go.
Yeah.
I gotta go check it out.
No, it's insane. Like I had to go out there and we were working on because I had to assemble the acreage next to him. He's like, this 150 acres is coming. I gotta get it. Like we had I had to go refinance 3 buildings for him to buy it and all this stuff. So yeah, no, he built a pretty big compound out there. So
and he's got his boys are great basketball players.
Yeah. So Arsh played at North Texas, and he's working with them now. And then his younger ones are there. He built a full gym, like a full basketball court, indoor basketball court gym, all this stuff. So yeah, he's done well. COVID did good things for trucking too, not just industrial.
No, absolutely. That was a heck of a time, I think, for all those guys.
But so, anyways, out of that story though, like, all these guys start coming to me. They're like, "Hey, I need a shop on 5 acres. Hey, I need a shop on 5." I was like, "Golly, where are these?" Then like, I kept getting to the point where I was like, "This is too difficult to find these things because they don't come available. No broker works on them, so there's no inventory. No one markets them." And then I just started doing them. Then that's funny. I did so many of them off market, like. I did Ideal Lease on Irving Boulevard off market. I did Southwest International's truck. Did Salem Truck Lease off. Like all these were off market. Like
you original iOS broker.
Yeah, I was just literally. I was just moving people around, and then I kind of grew up in an iOS building. Jeff and I's dad has a building in Grand Prairie that's 18,000 feet on 5 acres, grade level, clear span. You know, so everybody comes and tries to buy it off us all the time. I'm like, this is like a family heirloom. I was like, I'm never selling this. So I understood those buildings, and that's, a lot of metal shops were in them. So I'd been in so many metal shops. I was always like, man, there's like a thing here. And I just never like went and perfected it. Like, but it was always just some, and then I remember the one real key moment I really realized this was I got my next door neighbor, they owned a trucking company. At my house, and next door neighbor on my street, and they'd sold the asset division, but they had like a 6,000 foot shop on 4 acres in Grand Prairie, and I listed it. And I remember when I turned the listing in, like the listing coordinator was like, "You're not putting a junior broker on this?" I go, "This will be done in 30 days."
Yeah,
I go, "These things will come available." Listed it, Sun States, full price next day. Amazing. Just renewed them again. They've been in there like 12 years now, so it's I knew that product type just had a need because no one worked on it.
Yes.
And when you could find it, like you had to do something because like if you didn't want it, there was 3 other dudes that did.
Yeah. Like that's the original data. We looked today at like having good data points, right? Kind of leasing comps, what's the activity, what's all the that's the original data. That's real data. What's tenant demand look like? Like that's real. And that's where your thought process of, hey, we need to buy these. So I should have listened to your data was so good. Like, we need to buy these because the real-time data I have is this stuff's leasing. I can't keep it on the shelves, and probably I can pick a rate, and someone's going to lease it for that. Yeah. Like, that's rental rate growth. Like, there you go. That's the stuff you want to own.
Yeah. No, it is. It is. So on that topic, it's blossomed into this food group now, and to a degree, like that's where it gets a little nervous. Like, can you keep pushing rates, right? Because every brokerage now has an iOS team, so they all track inventory, and it's like so there's options, right? Tenants have options, so that's the interesting thing for me in iOS is like I'll always buy it just because it's innately in me to know that I can lease it, But I just kind of wonder at some point, like it's always been there, but we're creating it.
Yes.
You know what I mean? It's like it's been sitting underneath your nose the whole time, but you're like, there's tons of it here, even though there's a limited supply, which is a lot of people's thesis. Yeah. But a lot of people are touching it and creating this inventory of it.
And as soon as they buy it, they bought it for a certain price, and now they need a certain lease rate. Yeah. Right? And so everybody, when they buy it, they're pushing lease rates. It's like, when does that break? Yeah. Right? Right. Like, you don't want to be there buying based on where you think it's going to go, and it doesn't go there, then you got a problem. Right. Right? it kind of feels like Shallow Bay did to me. iOS kind of feels like Shallow Bay like 3 years ago.
Yeah.
Where you had this wild rental rate growth, and a lot of groups were buying based on where it was going to go. And if it doesn't go to where you underwrote it to go, and you paid the price based on expecting it to go there, then you lose money. Or you gotta hold, and hopefully rental rates get there over some period of time. But you better hope they do. If you were that buyer, iOS feels kind of it's on that trajectory.
It's getting there, yeah.
But like, so when do you stop, or when do you slow down? Because you don't want to be the person right at the peak, right? Like that's the worst place to be when you buy at peak, and so you don't want to be that guy or girl. But at the same time, it feels like there's some real rental rate growth still happening. We talk all the time. I mean, literally yesterday, our conversation internally from me is, I don't want us to be underwriting things that may or may not happen. Like, we need to be disciplined. We need to be conservative. Again, like, can't lose dad's money. Can't lose our investors' money. So anything we're doing has to be from real data points that we have, where what are tenants actually willing to pay? And did we find the one random tenant that was willing to pay that price? And now we're making decisions based on that. We don't want to do that. Like, was it a unicorn site? And it was like the best of the best. And that got some lease rate. And now we're expecting everything else to get the same. We don't want to do that. But I will say, even right now, from where we were underwriting 6 months ago, 4 months ago, like the rental rate growth, like I'm kind of surprised at some of the stuff that we're getting now, that I'm like, well, I didn't think we were going to get that much. And actually we had two tenants fighting for it. And so that makes me feel good, at least for right now.
That's my challenge is I look at it and I get told by these brokers like, oh, you can get that for it. And I'm just like, oh, you're full of shit, and I'm like, but then people are achieving it and I'm like, damn it, I missed. It's almost like it's, old broker, old pricing. I could be falling victim to my own, exploitations that I've used.
Sometimes knowing too much hurts you.
Yeah.
Because you're like, oh, well, I remember when this was this price, or lease rates were whatever.
Yeah.
And so sometimes you have that, and it like taints your thought process on where things are going.
Yeah.
Like, so there's that disconnect. It almost helps to not have background sometimes.
Totally.
You know what I mean? Like, sometimes the ignorance is like helpful, because then you're not looking at old data. You're just looking at, where are we today, and where do I feel confident, comfortable? Like, where are we going to go?
Yeah.
If you don't have the old, sometimes helps.
Yeah.
If that makes sense.
No, it does. I mean, because I started like right in GFC, like right at the tail end of GFC, and like it was like a ghost town in Brook Hollow. Like, I mean, there was signs littered everywhere, and like every building was vacant.
50 rates or whatever.
Free rent, just don't let the power get ripped out, please. So but if I have to look back and say, I've never seen us revert back to that.
Yeah.
This is something I think Jeff pointed out to me, and like as of recently, so I'd be interested to hear your take on this. Down cycles are going to be shorter into perpetuity in the future, because the news media cycle corrects everything so quickly now.
That's fascinating.
Yeah.
I can't say I disagree with it.
Yeah.
Because you're right. Like, we've never had the speed of information. Like, you just jump on Twitter and you have, 20 bits of information from the last 10 minutes that are real live data points. And then people are reacting, right? Real time. And then, so are you avoiding something that might have happened if everybody didn't think it was going to happen, or have the news that it was happening, and then market corrects itself?
Yeah.
That's interesting. I don't disagree. I would agree with.
I mean,
that.
look at the stock market.
Yeah.
Stock market. Oh, they're like, oh, it's down. Well, next week it's
Never
right back
goes
up.
down.
It never really goes down anymore. Like,
what is happening?
I mean, think about like the news cycle of like, I mean, like, do you remember we took that guy out of Venezuela? Like it feels like
I
that
don't
was
remember
like
that, yeah.
it feels like it was like 2 years ago now.
Yeah,
it's like
absolutely.
everybody was up in arms about it, and then then the storm happened and ice, and it's like we're onto this now. It's like they get you onto the next thing real quickly.
You remember Greenland? That was somewhere in the mix of all of that.
I mean,
we
remember
buying it.
We bombed Iran this year.
Yeah,
like that feels like
don't remember any of that.
Well, it's like crazy too. It's like what are we at? I mean, we're just now at 1 year of Trump being in the office. It feels like he's been in there forever.
It was like, yeah, that's exactly right. Like the news cycle, how many we've been through already, and probably more to come.
Yeah. So I don't know. That's I think cycles slow down. I do feel it seems like tenant velocity slowed down a lot last year. It seems like it's picking up a little bit more now.
Absolutely.
Yeah.
I would. The 24 was rough from a leasing perspective. Early 25, it was like, I think people were just trying to figure out, are we going to have tariffs? Like what's going to happen in the world?
Right.
So like,
they had objections.
Right. Yeah.
Now they don't have any more this year.
Yes, that's right. It's like now you don't have any of those. And like, I would say we probably saw a big pickup Q4 on the leasing side, but like now it feels that's continued forward and feels really good.
Yeah.
But we'll see. It's not what it was at, 2023, 22, like the leasing there was a period of time, you remember this, there was a period of time where you literally were better off leaving a building vacant than signing a lease, because next month the lease rate was 10% higher or whatever. And you're like, well, I'm better just waiting and signing no lease with anybody. And like, what a wild time. Like, I don't know if we'll see something like that ever again, but there was that period of time where you're like, keep it vacant. Don't sign the lease.
There was a time Turner made this report up one time, and it was like landlords should only do 1-year leases and tenants should sign 10-year leases.
Yeah. No,
and it was crazy.
Right.
And like, I remember I had a guy on Director's Row in an all AC space, and this was like this was probably 22. And I was like, hey, I got you we're still going, so. Okay.
We can leave this in. This would be so cool.
I just want to have time to wrap it up.
Okay. All right. So, anyways, it was just fascinating. I told that guy, I was like, hey, he got a $5 gross renewal. I'll go, you need to sign a 10-year lease.
Sign it, yeah.
Like, you need to sign a 10-year lease. Like, you'd be crazy if you don't. So, well, let's talk about just real quick, because I know you got to get, you just had a big event happen.
Yes.
You want to talk about that?
Yeah.
Yeah.
Kind of full cycle on Brook Hollow, actually.
Yeah.
It was a long process. It was a 6-7 month process, but we actually just closed a recap of a portion of our Brook Hollow portfolio. It was 20 buildings. It's like 1.3 million feet with Blackstone, strategic partners, and then Partners Group in a new vehicle. And so that was a crazy milestone for us to go from, literally buying our first building, buying Roundtable, friends and family, and $25,000 checks to, having some of the biggest institutional partners in the world.
The biggest.
Yeah. Say, hey, we like what you're doing. They spent all sorts of time on the diligence, and to say, hey, we like what you're doing. We want to partner with you. Pretty cool.
Yeah.
Cycle.
Did you ever think buying buildings in Brook Hollow that Blackstone would be your partner?
I mean, no.
Like, no way, right?
But even like just generally speaking, even for us to be where we are today, there's no world that I envisioned we would be, as big as we are today and doing as many deals as we are today and have raised as much capital as we've raised. All of those things they're just out of this world to me.
Yeah.
So sometimes it's almost like surreal, like, this is crazy. It's fun.
Yeah.
It's so fun. Like, it doesn't get more fun than, for me every day, like, it doesn't get more fun than this. Like, I wouldn't trade this for anything.
Yeah. It's pretty addicting.
It's so addictive. I'll give you this stat too. So we ran our last year. We, in Shallow Bay and iOS, in DFW, we closed on $416 million in sales.
Wow.
Like, what?
You purchased purchased
Sold.
and sold.
We
You sold.
just sold.
You sold 416 million. Is that
Yes.
including the recap? Like you count that number in there? Yeah.
Yeah.
So, man,
That's wild.
yeah.
Like we think the market. I've kind of asked a couple bigger brokerage firms.
Yeah.
We think the entire market might have been 1.3, 1.4 billion.
Yeah.
In the same, like Shallow Bay, we're not talking about Class A. So Shallow Bay and iOS, we think the market might have been something like that. Like we might have accounted for 20, 25% of the entire DFW
crazy.
Shallow Bay industrial market. That's wild. That's wild.
That's sick.
But upward from here. Now it's like, now we got to
Go
do
do
more.
it all
Start
again. Go do it all again.
Gen 1, like reset the clock and you start again.
There's always more deals.
More
You can
deals.
always go do it again. That's what we're gearing up for sale here, and you always told me it's like, hey, you got to sell some stuff. You got to sell some stuff, and
Absolutely.
like so we're fixing to gear up for our first big one, and I'm pretty excited about that to kind of set that watermark for us as a company, and then go see what's next. But I always kind of my iOS sites. I'm like, oh, I can't let go of these things. I'll never get them again. I'm like, screw it. I'll figure it out. So
you know what? You'll have seller's remorse.
Mm-hmm.
Your bank account will not.
Yeah.
And what it will then do for your growth and capital raising
Yeah.
and everything else.
Yeah.
Well,
Yeah. I'll forget about it real quick. So.
Yeah.
Well, I know you got to get, man. So I appreciate you coming in. We could probably talk for about 12 hours.
I love it. No, I love it.
We have
It's
so many
by.
war stories too.
Absolutely. So we're gonna flip this.
Yes.
And I'm gonna do one with you.
Yeah.
Because I think a lot of folks would love to hear some of the stuff you have.
Yeah, absolutely.
Yeah.
That's going to be really exciting. So we will start working on that. So.
Awesome.
Well, thanks for
having
coming,
me.
man. I appreciate it.
Love it.
Awesome.
Thanks.
Thanks.